Alright guys, welcome back to my channel. For the new subscribers, thank you for subscribing. For the viewers, thank you for clicking this video. So in today's video guys, I am going to be breaking down how to trade the ICC concept, right? So I'm going to be explaining exactly, right, how to trade the ICC concepts and how to use it in your trading strategy in 2024, right? I'm going to be using this slide I created. So if you do want to access this slide guys, it's going to be at the bottom of the description, right? So let's jump straight into it. So guys, if you don't know what the ICC concept is, basically guys, the ICC concept stands for indication, correction, continuation, right? So essentially guys, the ICC concept only works when price is trending, right? So basically how it works is this, right? So you can clearly see here on the left hand side, the indication basically just shows how far price wants to go, right? That is the indication. Then the correction is basically the retracement back to a level or an area of interest, right? And then the continuation is now the price now continuing the trend. So to see this in a practical view, right, you can clearly see here at the left hand side, you can clearly see guys the indication, right? So price was trending up. It now broke past this previous high here, or this level here, giving us an indication, right? And then it now corrected itself, as you can see. So the correction is the retracement here. So in this case here, you can see price now corrected itself by retracing down after the indication. And then as you can see, the continuation is price just continuing the trend in the direction, right, that it was going to. So that's basically what the ICC concept stands for, right? Now guys, essentially guys, the ICC concept is a way to look at the markets when it's trending, right? So that's basically what it is. Now a lot of people will say, oh, this is basically a break and retest. To be fair, you are correct, right? It is basically a break and retest. It's just a different perspective, right? So guys, now the next thing you have to learn guys is going to be the area of interest. So basically guys, the area of interest is basically an area of interest, right? So how I explain what the area of interest is basically, you know, where the separation, right, of buyers and sellers are, right? So the area of interest is used, you know, for taking your trades, for closing your trades, taking partials, and knowing where the separation of buyers and sellers are, right? So to give you an example of this guys, you can clearly see here, this is gold in the 1 hour time frame, right? So right here guys, clearly on the left hand side, gold, right, has no area of interest here, but on the right hand side you can clearly see there's an area of interest, right? So basically the area of interest just shows, you know, the separation between buyers and sellers. So you can clearly see here guys that at this support, you can clearly see that buyers are strong above this level, right? And I can clearly see here sellers are strong under this level, and then buyers are strong above this level, and you can clearly see price reacting to that area of interest as a trend, right? So basically guys, right, essentially, right, the area of interest should be marked up at the 1 hour and the daily time frame, right? So let me break this down exactly how you actually find your area of interest and things like that, right? So when it comes to marking up your charts, right, guys, I keep this super simple, right? So let me break this down. So when it comes to GJ area of interest, right, boom, we start from the daily time frame, right? So I only use 3 time frames. I only use the daily time frame, I only use the 1 hour time frame, and then the 5 minutes, right? So basically guys, you know, the area of interest should be marked up in the 1 hour and the daily time frame, right? I will basically tie everything up at the end, but like I said, the area of interest is used for taking your trades, pulling out of your trades, and then showing the separation between buyers and sellers, right? We can basically use the area of interest to follow the trend and know when price wants to retrace before continuing the trend. So basically guys, I'll tie everything together, but the next step really guys is going to be the entry signal. So when it comes to entry signals guys, it's just really the easiest part. I really use only 6 entry signals, right? Engulfing pattern, harami, tweezers, you know, false harami, and then gravestone dojis, right? So basically guys, I suggest you read the Candlestick Bible, right? Because it will definitely help you to understand much more in depth about my entry signal and really help you understand the ICC concepts in general, right? But back to my analysis. When it comes to finding your area of interest, guys, how I do this is very simple. I start from the daily time frame. So I basically just look at, okay, where is price showing a separation between buyers and sellers, right? So in this case here, I can clearly see that price has an area of interest here. So like this area here, you can clearly see that around this area here, price showed like a big separation between buyers and sellers right here, right? Boom. And like I told you guys, I like to always color code my stuff, right? So I like to use blue as my daily indication, and then white as like my 1 hour indication or support or resistance. So this is one area here. I can actually just look again, and then I can actually see that price kind of reversed from here too. So if you notice too, there's also this area of interest here too, right? Or I would say separation between buyers and sellers. So you can clearly see here too that there's a separation between buyers and sellers here, right? And then also, let me see, likely here too, to be honest, right? So there is another area of interest right here too. You can clearly see, right? Boom. Right. So guys, what you can notice with this area of interest in the daily time frame is basically like separating the buyers and sellers, right? You can clearly see that where I marked my area of interest, you can clearly see that price is reacting pretty well off that area. So that's basically how you need to look at it. And also, like, you can clearly see that in that area of interest, above it price is buying, and then below it price is clearly selling, right? So in this case here, price above this area of interest was buying, right? Even under this area of interest here, it was selling, and then it now came above that area of interest, and then now bought up. As you can see, bought up, right? So this would be the daily area of interest here. And then I could also mark up I would say maybe this area of interest here, but this is outside of the points because price has literally not reached there, as basically already passed. So there's really no need to mark this area of interest, but I'm just marking it just because it does look a lot like this, right? But the main point is, guys, like, the daily time frame really is to look at the grand scheme of things, right? Just look at where price is likely going to go in the overall scale, and then in the 1 hour time frame, guys, is just where you're going to be following the trend. So you can clearly see, guys, that like there's going to be a bunch of area of interest in the 1 hour time frame here. So from the top of my head, I can clearly see that price has an area of interest here, right? And like I said, I always color code my things. Boom, boom. And then clearly price has another area of interest here. Boom, like that. Now basically, guys, where you would take your trades is basically either here, or you could probably take your trade here too. Boom, right? You can clearly see. So this is basically how it works. Now basically, guys, you need to know how a change of trend works when it's buying, right? So basically, price has to break and close below the previous low, right, for a change of trend to happen. So one of the biggest questions I get or I see, right, and actually this was actually one of my most viewed videos on my Instagram, was basically how to spot a reversal, right? So in order for you to spot a reversal, guys, when it comes to price in a uptrend, you have to know where the previous low is, right? Where the previous low is. So in this case, you can clearly see here, right, price was clearly going up. So indication, correction, continuation, right? So you can clearly see that the indication is the white, the correction is the red, and then the continuation is the green, right? So you can clearly see that price was in an uptrend here, and then this was the low. As you can see, these are the lows here. Then notice how in this next picture here, price now gave an indication, but it closed and broke below the previous low. So when it breaks and closes below the previous low, this is a sign that price wants to reverse, right? So let me give you a very good example here. So you can clearly see, right, on the left hand side here, on the top left, that price was in an uptrend, creating higher highs and higher lows. Now this was the previous low that price created before creating the most current high. right? Then price now broke and closed below this previous low with this specific candle here. So immediately this candle closed right below this previous low. This is your sign that price is likely going to reverse. And as you can see, guys, price did reverse, right? Clearly. Now, guys, you're going to ask yourself, okay, how do I determine a low? You feel me? Right? Like, okay, how do you actually determine a low? It's very simple, guys. You determine a low with at least 2 candles, right? So we use the low to determine when a change of trend happens. Now, how do you determine the low, right? Basically, guys, it's very simple, right? So you can see the blue arrows, right? Shows you those cannot be considered the low because it has one white candle, but the orange circle shows the actual low because it has at least 2 white candles, right? So basically, guys, when it comes to you figuring out the low basically is having at least 2 solid candles, right? So in this case here, this cannot be the low, this cannot be the low, right? This is the low, right? For price to now break and say, okay, it was to actually break trend. So let me show you another example again, right? So you can clearly see that price here, right? So this is going to be a random chart, and you can clearly see that, right? This is before the markup. Now this is after the markup, right? So now, guys, if you try to find where the low is, right? The low is basically the previous low. Actually, when it comes to this graph, you can see here the previous low literally is going to be this right here. So this is going to be the previous low right here, right? So this cannot be considered the previous low. This cannot be considered a low. This cannot be considered a low because it has only one candle, right? It has only one sell candle. So this can be considered a low because it has, you know, at least 2 sell candles, right? Same goes for when price is selling, right? So as above, so below, right? So the same way you will look at a reversal when price is buying is the same way we look at a reversal when price is selling, right? So let me give you a much more practical example. So in this case here, right, like I told you, right, when it comes to you figuring out a reversal, price literally has to break above the most current, you know, high when it comes to price in a sell trend, right? So in this case here, price was clearly selling, creating lower lows and lower highs, right? So a reversal basically is this right here. So the reversal basically came from this candle, right? So this was the indication, right, that price wanted to reverse, right? So price came, creating lower lows and lower highs, and then this was the most highest, like the most recent you know, high that we had, right? Because this high here, right, is valid because this low was created, right? You cannot use this as a high because this low has not been, you know, broken, basically, right? So you can't use this as the high for price to say, okay, the trend has changed, because, you know, for us to consider this high, it has to have broken past. So basically that high has to have created the most current low, right? Or the most, yeah, basically the most current low. So in this case here, guys, price was here. It now sold and broke past this previous low here, right? So we basically use the body close when it comes to figuring out what the high and the low is, right? So basically price closed below this previous low here, right, in terms of the body close. So because price closed below this previous low, this is considered the new low, and then this is considered the new high, right? So price literally has to break above and close above this body here for us to consider that price has given us a sign that it wants to change trend. So in this case here, price now came and now closed above this here. So this will be an indication that price is selling and price is about to actually start buying. So in this case here, what we're actually looking for is when price now did this and broke and closed above this previous, you know, high, we're expecting a retracement. And as you can see, price did give us, you know, a buy entry here, but then, you know, it did not fulfill and then continue to sell. So in this case here, guys, obviously, you know, it's all probabilities at the end of the day. But the point is this, guys, price will always, when it comes to a reversal, guys, price will always give you that specific, you know, characteristic, right? So in the terms of, in the sense of, you can clearly see a price was clearly buying in an uptrend here, right? And then all of a sudden, price created this high. So if we zoom in very closely, right, you can clearly see that this is higher than this. You know, if we really zoom in closely, you can clearly see that this is higher, right? So this is the new high. Now this new high has been created. Now because this new high has been created, the low that we are going to be using now is going to be now this low right here, right? So it's going to be this low, boom, right here. Why is it this low? Because we can't use this, right? Because this has already two, it doesn't like, it needs to basically like form like a curve, basically, right? So in this case, this is not really a curve. This is like basically one candle, right? It needs to have at least two solid candles here. You know what I mean? So after this candle here, it needs to have at least two solid candles, right? So in this case here, it had two back-to-back solid candles here. That one makes this low legit, versus this one here, it didn't really have two back-to-back, you know, sell candles. It had like this bullish and then a bearish, right? So in this case here, guys, we literally have to wait for price to break and close above this area for us to say that price is looking to now start selling, right? So in this case here, price now closed and broke, you know, it basically closed and, you know, broke below this previous, you know, low here. So immediately it did this. This was your sign that price is likely going to change trend to continue buying, right? So in this case, as you can, to continue selling, right? So in this case, as you can see, price now closed below this low, and then as you can see, price now switched trend, you know, from buys to sells and started creating lower lows. And guys, notice how price literally is respecting, bro. Like, it's literally respecting what I'm saying in terms of, right? Notice this. Like I told you guys, price, right? When, like, let's say price is selling right now, right? The lows we're looking at right now when it comes to waiting for reversals is basically this low right here and these highs. So these are the highs that you should be watching for in case price wants to give you a sign that it wants to reverse. So in this case, when price created this new low, price has to break and close above this high for us to consider price to now change from sell to buy, right? Now price now came, created these two buy candles and then created a new low here. So now the new high that price needs to break is now this high, right? And then price now came, created a low here. So now the new high that price needs to break for the trend to change is now this, right? Same again, price now came, as you can see, it literally respected it. Like, you can clearly see it respected this specific high and they now sold again, right? Now it now sold down. Now once it sold down here, the low, the high that price needs to break now is going to be now this high, right? So you can see, and not this high, right? Because this high here does not have at least two buy candles, but this high has at least two buy candles for us to call that high a legitimate high. Now notice this, guys, right? You can clearly see that price broke above this previous high, but then it did not follow through in the continuation of trend, which is perfectly fine, right? At the end of the day, it's all probabilities. But notice this, guys, in that same breath, notice how price now closed, right? Now broke and closed above this previous, you know, this previous low here. Because, guys, when price broke above this previous high here to change trend to buys, right, we now have to look at this low here, right, for us to say that price needs to break and close below this low for us to now say that, okay, price wants to start selling. So in this case here, right, price did break and close above this previous low. So when it broke up below this previous low, right, where do you think the high needs to be for us to now say that price is now, you know, bullish? Basically, this is the high right here. So price needs to break this high, right? Because if you notice, this cannot be the high because it doesn't have at least two solid, you know, buy candles. This cannot be the high because none of this, you know, candles is like two consecutive, you know, buy candles. Now this can be the high because price literally has two buy candles here before it now gave, you know, the curve down to the downside. So in this case, you notice how when price now finally closed, you know, below this previous low for us to now say that price is selling, it now retraced up. Notice what happened here. It literally retraced up at some point and went above this previous high. But guess what? It literally respected it and went and closed back below. Same thing too with the same candle here. It's closed back below. So this already is giving you the indication that price is is still in a sell trend, right? So because price has not broken above this high here, we are still selling, and as you can see guys, price currently sold. So now what do we have here, right? Price is currently selling. So basically now let's assume price closes above this previous low here, like this, right? Maybe something like this. It now closes below this previous low like this. Now the next high that price needs to break for price to say now it's in a bullish trend is now this high right here. This is the high, not this high, but this high, because this is the most current high, because this is the high that created the most current low, basically, right? So that's basically how you would, look at the reversal and things like that, right? But that's basically, how it is, as above, so below. Then when it comes to the entries, guys, your entry comes after the correction, right? So after the correction happens, you wait for a 1 hour or 4 hour signal pattern. So in this case here, you see the indication, then the correction happens, and then the continuation. So before the continuation happens, guys, your entry is literally right there. So you can clearly see that when the correction happened and it tested that level, your entry was now this shooting star, and you can clearly see that price now, bought all the way up from there, right? So that's basically how it works, right? So now let's basically tie everything together, right? So you can clearly see, guys, that this is the GBP/JPY, daily time frame without an area of interest, right? Now let's add an area of interest, as you can clearly see now. So this was before the area of interest, this is after the area of interest, right? And then this is the 1 hour time frame. So I was basically explaining this reversal. So this is the 1 hour time frame with an area of interest. Can you tell what trend it is? The trend is basically sells, right? So the trend right now is basically sells. So you can see that price was bullish at first. It came to the daily, so let's actually break this down. So you can clearly see that price was bullish at first. It came to the daily area of interest and changed the trend by breaking and closing below the previous low. Price gave an indication, correction, and then a bearish engulfing signal, and the rest was history. So basically what I was saying is this. You can clearly see that the previous trend was a buy trend, right? It was buying. While it was buying, guys, it now approached this daily area of interest. When it approached this daily area of interest, guys, it now broke and closed right below the previous low, which now means that price has changed or has given a sign that it wants to now turn, bearish. So in this case, price was literally creating higher highs and higher lows. It now came to the daily area of interest here. This was the low, right? So because if you zoom in real quick, you can clearly see that this low here, right? The reason this low is valid is because it has at least 2 buy candles, 2 sell candles in this case, because price is, bullish. So it has at least 2 sell candles. And then this high that was created is the most, when it comes to the body close, is the most current high. So because this is the most current high, and it's right, because this is the most current high and it connects with the most current low, then price literally has to break below this specific low. In this case, this was the candle that broke past it, and then it now gave an indication, and then now corrected itself. When it corrected itself, it now gave you a signal right here, which is going to be a bearish engulfing. And as you can see, guys, you enter the signal right here, and then boom, the rest is history, right? So this is basically how, you would, train yourself to, trade the ICC concepts. Now, when it comes to, common mistakes, guys, this is basically, going to be a me problem, to be honest with you. You know what I mean? So when it comes to common mistakes, guys, one of the things I do make is, not pulling out of the trade when price reaches your, your risk threshold, which I will explain in a different video, or even like when price reaches your area of interest and then, you don't come out of that trade. I do have, tendencies of holding my trades, which is bad, not getting enough sleep and then skipping a trading session. I'm very sure you guys have, experienced this, where you sleep and then when you sleep is when the move actually happens. That happens to me too. And then also, like, sometimes, guys, I can be a cat. I start, being emotional whenever I lose a trade, which we should stop. But yeah, guys, this is basically, how to trade the ICC concepts and master it. And also guys, this is going to be like an experience point. So basically what I have learned over the last like 3 years. So I do have some like gems I do have. So for example, like if you ever want to like take partials, it must be 80% of the partials. I never let 80% of the partials go back to entry, right? So that's another mistake I've made is like whenever like I want to take partials, I'll take 20% partial and then let the 80% run, which is greed. Instead, I should do opposite and take 80% partials and then let the 20% run, right? And then guys, like you could literally catch a 10-hour setup. I will explain in a different video, but guys, these are literally like my experience points. If you do want to get this, you know, this ebook, you can always click the link at the bottom of the video. And like I said guys, this is my first ebook, so please give me feedback, you know what I mean, if you don't understand anything. And you know, I would update this ebook as time goes on. But yeah guys, this is basically how you master the ICC concepts. Honestly guys, the more screen time the better. But yeah guys, I'll keep uploading videos just to, you know, keep you updated. I will see you guys in a different video. Peace.